One of the biggest benefits of the VA loan program is that veterans who've hit a rough financial patch can still qualify for a mortgage. But lenders will need to take a closer look to ensure that you can handle the responsibility of that monthly mortgage payment. In these cases, you might hear a loan officer say that your loan will need a manual underwrite, or that it will need to be manually underwritten. The first question in the minds of many borrowers is, what exactly does that mean, and how does it differ from the normal underwriting process? So here's how. When veterans come to a lender, their information gets entered into what's called an automated underwriting system, or an AUS. This is basically a computer program that helps streamline the application process and let lenders know at the outset whether a borrower will meet credit and income guidelines. Loan applications that receive an AUS approval can allow lenders to move forward with less paperwork and fewer documentation needs. But there are certain circumstances that can knock an application from AUS consideration. Some of those can include a shallow credit history, if you don't have a lot of depth with your credit, if you've had a bankruptcy in the last 24 months, if you have default or delinquency on federal debt, if you've had late mortgage payments in the recent past, or if you've had a recent foreclosure, short sale, or a deed in lieu of foreclosure. A file that gets bounced from the automated system might be eligible for a manual underwrite. This means that a real live underwriter will have to crunch the numbers and evaluate the risk from day one rather than later in the mortgage process like normal. Your loan file, it's being underwritten manually by hand from the start. Now, veterans who are facing a manual underwrite will likely need to meet tighter requirements. They're going to have tougher guidelines a lot of times for things like DTI, debt to income ratio, for derogatory credit, in terms of financial documentation, and more. For example, some lenders on an AUS file might be able to work with a DTI ratio up to 60 or even 65% in some cases. But on a manual underwrite, that threshold, it might cap out lower, maybe at 45 or 50%. Guidelines and policies on this are going to vary by lender. Lenders might also limit how much they'll lend to borrowers whose loans require a manual underwrite. Now, on a manual, you might also need to provide detailed information about your current living situation. Veterans who aren't currently homeowners might need what's known as a VOR, a verification of rent, if they're planning to buy a home. Lenders want to see that you've made on-time rent payments or that you have solid assets while living rent-free, and that can help lessen any payment shock that can come with all of a sudden having to start making monthly mortgage payments. Now, there are all kinds of rent and living scenarios. You might need bank records, canceled checks, a letter of explanation, and more to satisfy VA lenders. We have an entirely separate article and video on verification of rent if you want to learn more about VORs and the VOR process. Now, manual underwriting can make the loan process a bit more involved for military borrowers, and guidelines can and will vary by lender. But the good news, veterans who've been hit by tough financial or credit events may still be able to secure a VA home loan. And that's in part what makes this historic benefit program such a powerful home buying tool.